What happens when one country's loss becomes another country's golden opportunity? Imagine this. China suddenly buys 540,000 tons of Australian canola in one move. To most people, it looks like a normal trade deal. But beneath the surface, it sets off ripples across global agriculture, energy, and geopolitics. And here's the twist. While it looks like Canada could be the biggest loser, in reality, it's Canada that might just turn this crisis into a massive win. Stay with me, because in the next 30 minutes, we're going to break down how a single agricultural trade, something as ordinary as canola, reveals the hidden power struggles between China, Australia, and Canada, and how Canada is quietly playing the long game that canola isn't just a crop. It's one of the world's most important sources of vegetable oil and animal feed. Canada and Australia are the two biggest suppliers on the planet. China, on the other hand, is the world's biggest importer. Its domestic demand for edible oils is massive, and its livestock industry depends heavily on oilseed meals. Now rewind the clock. For years, Canada was China's #1 supplier of canola, but in 2019 things changed drastically. After diplomatic tensions over Huawei and the arrest of Meng Wanzhou, Beijing hit Canada where it hurt, banning canola seed imports from Canada. That decision created chaos for Canadian farmers, who suddenly had fewer buyers for their crop. Meanwhile, Australia was dealing with its own tensions with Beijing. But when relations thawed, China came back to the table in a big way. That's where this shocking 540,000-ton deal comes in. It's more than just numbers. It's China sending a signal. Australia, we trust you again. Canada, we don't need you, or do we? Leave it stronger than ever. China doesn't just buy food for today, it buys food for leverage. Every ton of Australian canola it secures weakens Canada's hand, at least on the surface. By locking down supply with Australia, Beijing creates two outcomes. Diversification of supply. China avoids relying on Canada, a country seen as politically risky. Price manipulation. When China pivots hard to Australia, it pushes down global demand for Canadian canola, forcing Canadian farmers to sell at lower prices. But here's the hidden flaw in Beijing's strategy. The global edible oil market is interconnected. If China pulls heavily from Australia, it tightens supply in Asia, forcing other buyers like Japan, South Korea, and even the Middle East to look elsewhere. And that's where Canada suddenly becomes the alternative supplier. It's like a chess move where China thinks it's cornering Canada, but in reality, Canada gets new markets knocking at its door. For Australia, this looks like a big win. 500,000 tons sold in one swoop. Farmers are celebrating, politicians are patting themselves on the back, and headlines scream about booming trade. But if you look deeper, Australia is putting a lot of eggs back into the China basket. Remember, just 2 years ago, Beijing slammed the door on Australian wine, barley, and coal. Those industries collapsed overnight. What's stopping China from doing the same to canola if political winds shift again? Nothing. That's the dangerous game for Canberra. While Canada is being forced to diversify its buyers, Australia is rushing back into dependence on one customer, the same customer that weaponized trade against them not long ago. Now here's where things get interesting. Canadian officials and industry leaders saw the writing on the wall after 2019. They realized, if China can cut us off once, they can do it again. So Canada started diversifying aggressively. Instead of just selling to China, they expanded deals with the European Union, Japan, Mexico, and even looked into biofuel production at home. That diversification has started to pay off. When China buys huge from Australia, Canada doesn't collapse, it simply shifts its supply chain. Sure, prices dip in the short term, but in the long run, Canada is building resilience. And here's the kicker. Climate change and the global push for renewable fuels mean canola is no longer just about food. It's about energy security. The U.S. is ramping up renewable diesel production, and canola oil is a prime feedstock. Guess who's best positioned to supply it? Canada. Here's something most headlines won't tell you. While China plays its trade chess with Australia, the United States quietly strengthens ties with Canada. Why? Because Washington has a massive problem. It needs sustainable fuel sources for its growing renewable energy sector. Canola oil is perfect for renewable diesel, and Canada happens to be the world's biggest exporter. So while China celebrates a flashy 540,000-ton Australian deal, The US is locking in long-term partnerships with Canada for something far more valuable: energy security. It's not about one shipment, it's about an entire future fuel economy. This means Canada isn't just an agricultural exporter anymore. It's becoming an energy powerhouse in disguise. How? Let's zoom out. When China redirects its buying to Australia, other nations notice. Countries like Japan, South Korea, and even parts of the Middle East need stable canola supplies too. If China hoards Australia's output, these countries can't rely on Canberra. They'll turn to Canada. This gives Canada an unexpected advantage, being seen as a reliable, neutral supplier. Unlike Australia, which is often seen as caught in the US-China rivalry, Canada plays a quieter, steadier role. For nations anxious about food security, that reputation matters. Think about it. In a world where food is becoming a weapon, Canada positions itself as the supplier you can trust. No matter what Beijing or Washington are doing, that's a diplomatic advantage wrapped inside an agricultural product. Here's the irony. Australia's big win today could be its big risk tomorrow. Dependence on China creates a fragile future. Just as coal and wine collapsed under Chinese sanctions, canola could be next. If Beijing ever wants to pressure Canberra again, it won't hesitate to cut the flow. And when that happens, guess who steps in? Canada. By diversifying now, Canada avoids the dependency trap that Australia is walking back into. It's the difference between short-term gain and long-term strategy. So what looks like a crisis for Canada, a huge Chinese canola deal with Australia, might actually be Canada's turning point. By being forced to diversify, by aligning with the US renewable energy push, and by branding itself as a reliable global supplier, Canada is quietly winning the long game. And China? For all its strategic buying, it risks being seen as unpredictable. Using food as a weapon, something that makes partners nervous. The lesson here is powerful. Sometimes the biggest opportunities are hidden inside your biggest challenges. Canada was pushed out of China's market, but instead of collapsing, it built a stronger foundation elsewhere. And that's the story no one is telling. But here's the question we'll leave you with. If canola is just the beginning, what happens when the real battle begins, not over crops but over uranium, lithium, and the resources